Good morning, good morning, good morning, everybody. Hopefully, we're all doing well. Hope everybody had a decent evening, slept well. Hope you're ready to have fun today. Dealing with a little teensy gap down. Sometimes that's a gift, right? Chance to do it all over again. So let's see. As far as economic calendar, nothing today. We have jobless tomorrow and CPI on Friday. So we'll see what we get there. Looking at ES, we have been somewhat range bound between the daily 8, daily 21, and this 41.65. We've only peeked our head above it ever so slightly this week, but ultimately this 41.65 continues to be the resistance to the upside. Yesterday, we talked about, let's go over and see it. Kiana. Here we go. So yesterday we talked about this. There we go. Yesterday in prep we talked about these moving averages on a 4-hour time frame and how we had our push up and we have come back to bounce at the blue moving average and it's been propping us up. Yesterday in prep pre-market we talked about how we are starting to break that trend. And if we are going to see any upside, we have to very quickly get back above that blue line and then push off of it. Well, we got that first thing after open. There was only a teensy little dip, and then we rocketed straight up through those moving averages and kept on trucking. And just looking at these 4-hour candles, this 4-hour candle ran straight to our 41.36 and then took a break. And then the next one made it within $1 of that 41.65 and then took a break. So it was a very clear directional move back to key levels above. Today, with a slight gap down, we're about to open above 41.36. And just looking at things, it's about to be kind of our highest open for the week. Not counting this gap up crap that we had, right? That was a slightly higher open. But we're in a great position today to try to keep trucking. The only things that we have to keep an eye on are these, this trend line, which definitely slowed us down yesterday, has been rejecting overnight. So, the thesis for today is pretty simple. Can we hold 41.36 and a half? And this, what is the 8? Or is it the 9? Doesn't really matter. It's the 8. Can we stay above the 8 moving average, which has caught up to 41.36 and a half? I love it when moving averages catch up to key levels. Just adds confluence. So if we can stay above 41.36 and a half, we can try to get through this trend line, get through 65, and start the journey up to 4,200. If we cannot get through trend line or 4165, if we lose 4136, we will roll right back over to test our key levels. And this 4108 I added yesterday just because that's where the blue line was. So if you were in our chat, you heard me calling out, as long as we stay above 4108, we should keep talking long, we should be buying calls, we should not be looking for shorts. So that is what we got. That is why for every prep we will be doing an if this then that for each direction, right? We had the signs of a change in trend. I said if we are going to have any upside today, we have to get back above the trend and keep moving. So, and you know, if you watched prep yesterday, we also prefaced, you know, what the downside would look like. A rejection of that area, not engulfing this red candle and losing this trend line. Ooh. So let's see if we can get through this week's trend line from the highs. We still do have another trend line from this year's, some of this year's highs. Yeah, basically starting from March. So that's another trend line to keep an eye on. Let's just jump back over to our normal tool set. We do have some squeezes in play, and look at that. The bottom of this squeeze lines up perfectly with that 41.36.5. So with the gap down, let's see if we do one little dip to test this level. At the same time testing some of these pre-market lows, squeeze bottom, catch a bounce. Or if 4140 itself will be enough to hold us up and keep us going. The same on SPY will be 414. We'll see that when we get to it. But basically going to use these squeezes as a guide to go long off the bottom, lock in profit at the top, leaving runners, you know, so we can break out. But as you can see, we've already tested bottom and top, so we will likely do something similar once we open. And this 41.36.5 is key. Should we start to lose that, and 41.33, we'll obviously get down to these squeeze bottoms, but we're likely going to dip back to the daily 8, which has stepped up considerably, right? 2 days ago, it was below 4,100 after the push we had yesterday. Now it's above 4110. And it's catching up to 4120, 4118. Oh, excuse me. So, let's see if this key level can hold us up and send us higher through this week's trend line, or if we just fall back down into this range, into this wedge with no breakout. NQ. Very similar setup. And yeah, if you draw some trend lines here, we're already, same thing, kind of being held back by this week's trend line from the highs. And so let's see on NQ if this 12,600 can hold us up. That's kind of the key level. We have the daily 8 and 21 right below our squeeze. So NQ itself, if we continue this down channel, and it looks like we're about to fall back into it. If we continue this down channel into open, and there's a dip, we need NQ to hold up at the daily 8, daily 21. I can see them dip down to that, but need to see them bounce back up into the squeeze and push off of 12,600. If we can't hold, we'll go right back down to this 460 and this 4-hour squeeze bottom. But same as ES, we are range bound between key levels, and we could continue to stay in this range until Friday's CPI and economic data that's coming out. So be prepared for the final breakout that we've been waiting for, or be prepared for more of the same. On the ready, over 1900. I've been screaming that's a very key level. We could barely stay above it the couple of times we got to it this week. Now we closed above it and have stayed above it overnight. So, big key level on ready is at 1900. It's also above its daily 50, so would love to see the ready turn the daily 50 into support. Maybe not even need to dip to 1900, just use that to springboard higher. So keep an eye on the ready. Like I've said, it can kind of be the early indicator, the canary in the coal mine, whatever you want to call it. YM. YM above 33,000. Look at that. So, as you can guess, that's the key level on YM. I could see it dipping, 100 points to hit the daily 8. But would really love to see it hold this 975, stay above 33,000 to push back up through yesterday's high, the squeeze top, and a bid to get back to the daily 50. Right, so Ruddy is the first to arrive. Let's see how it reacts at the daily 50. YM will be the next one to arrive. If it can get going through yesterday's high, it will get there. For ES and NQ, it still sits above, but technically ES could get to the daily 50. Excuse me. ES can get to the daily 50 today. On NQ, I believe it's way, way above. Okay, not so bad. But, yeah, outside of a day's trip, so. Moving on, Apple. Right. Levels are so clean on Apple. We open right at our key at 144.42. Let's see, do we have a teensy little dip to smack this squeeze bottom and shore up some of the pre-market lows, right, where we kind of based. So quick retest of that, and off we went. From our key 144 right up to our zone at 147.5 and 148.93. And hilariously, when this finally broke through the daily 21, this candle stopped exactly at my 148.93. Then there was a couple of prints higher, but ultimately it could not break through there. So that is the key resistance above. Now that we are back above 147.5, I need that to stay a support. And keep an eye on that pre-market low if we do have a little dip. Looking for these levels to hold. Otherwise, we will engulf what we did yesterday, right? We do have that daily 8, which is likely going to step right up to our 147.5. So, need those things to hold. If Apple loses, it will slip right back and bring the market with it. If it can hold and try to get through 148.93 and this trend line, it's mission 150, 152 on a goal to get back to our zone above, right? So Apple's going to be a huge tell for the market today. like we say every day, it's a great gauge for tech. So let's see. Play the range until the range breaks. If we are holding here, go long. Once we start rejecting here, lock in your longs, add a little short just in case we roll back over. If we can get through this, obviously you cut the short once we get through and let the long continue to pay. Anyway, AMD. Ooh, AMD and some tight squeezes. And AMD had a nice bounce to stay above the daily 8, but then basically it did not do much yesterday. So looks like it's not a huge focus in chips, just keeping them propped up with everything else. So basically, play your tight squeeze until it breaks. Draw trend lines from highs. And yeah, let's see if the daily 8 can hold AMD up. If it starts to lose it, you can see we can vacuum right down to the 100 level where the daily 15 and daily 21 are starting to catch up to. Amazon. With Amazon, we should probably get very comfortable with this range where these squeezes are starting to set in, because she will likely be in this range for an extended amount of time. I'm not really going to cover it, Daily 8, daily 21, bottom of the squeeze should be support. Recent highs are going to be resistance, and she's probably just going to be chopping around this range for a while. No BA. Cat. Cat had a great day yesterday. Tapped that 222 and that squeeze bottom and took right off in a bid to try to get to that 227, 228. So let's see if Cat can stay above 225 today. It can get through that 227, 228 to get back to 230. If it starts to give out 225 and the market is also rolling over, it will engulf yesterday back to 222. Facebook. Facebook. 30-minute squeeze, trying to contain it for now. Starting to set new pre-market lows. If it gives out this squeeze bottom, we do have the daily 8 and daily 15 that will be coming in right at or below the squeeze bottom. If we give out these daily moving averages, we will likely go down to visit these squeeze bottoms around 190, 188. I don't really foresee us going all the way down to this zone, but if the whole market wants to roll and things start heating up, it could. Googly. Google's been making some good moves lately, bouncing off the 21. Yesterday it kind of led in the morning and then just fizzled out sideways. Watch this wedge and this squeeze. We get near the bottom, near 2320. It's a good spot to go long. If it gives out, we do have these daily moving averages that are going to be stepping up to that squeeze bottom. Should those give out, we're likely going down to this daily 15 and that 2260 squeeze bottom. If these can hold, we can try to get through yesterday's high and the previous day's high to get back to this daily squeeze top. GS. Yeah, not a real interest here on GS. She's coming down to the daily moving averages and kind of just chopping around them, with the gap down going to be opening right in between them. So I can foresee that this will probably just chop around in that range today. And same for JPM as it comes down and is now below the daily 8 and rejecting. Yeah, JPM will probably be stuck in this little range as well today. Microsoft. Tight, thick squeezes. Not getting through. Yesterday, nice springboard up to daily 15 in the squeeze bottom. Squeezes are starting to get a little wider now. And we have this nice little 30-minute leading us into open. So on Microsoft, if we can hold these pre-market lows, the squeeze bottom, it's a good spot to go long. If we can't get through pre-market highs, yesterday's high or the squeeze top, good spot to go short. I've talked about this a lot recently, how you can play the range, the extremes of the range. When you get near the bottom, you go long. When you get near the top, you lock longs, you go short. Vice versa. You know, when you get down here, you're locking shorts going long. And we leave runners in our wake. The paid runner, if you are hitting this zone and locking in some profit but leaving a runner, those runners become paid for runners, so that even if they go to zero, they're paid for by the profits from the playing the range. And basically, you don't need to be right about, oh, we're definitely going to break up or we're definitely going to break down. You just play the range, leaving runners. Once it breaks, you're already in and don't have to worry about it. You cut the loser. So on something like Microsoft here, play the range until it breaks. If we just slip below pre-market lows and come back and reject them, then it's a good spot to go short because we are breaking out of the range. But ultimately, play the range until it breaks. Netflix. Okay, had a decent day yesterday. Didn't quite make it to the daily 15, held this 193. Got back near 200, did not quite tap it. Yeah, basically it's the same range today. See if 193 can hold. See if we can get to 200. NVIDIA. Like AMD, tiny pop yesterday and then just kind of chilled. I mean, it did ramp late in the day, but the squeezes are settling in. So let's see on NVIDIA today if it can hold 187.5 or the daily 8, which will be stepping up pretty close to that. But for me, chips not a real interest, just as all these squeezes are setting in, as it slowly comes down and settles at the daily 8 and daily 21. Let it settle. QQQ. We got this nice dip right at open yesterday. I think we were calling out those 310 calls that hit beast and just took off, and we pretty much got back to 310 late in the day. So on QQQ today, use the squeeze, play the range until it breaks, right? Go long off the bottom, go short off the top, and once it breaks up or down, you'll be ready. The daily 8 and daily 21 most likely will be stepping up ever so slightly, right outside of the squeeze bottom. So we could see a slip 2 there and a bounce should they give out. We'll be heading back to yesterday's lows and potentially this daily 15 down near 300. We do have this. Ooh. We do have a 4-hour squeeze bottom right here at that 302, 303, right back at yesterday's lows. So if this range gives out back to yesterday's lows to test the 4-hour squeeze bottom, where we can see reversals. Anytime we tap a 4-hour squeeze bottom, it's a high likelihood of reversal. Oh my Roku. Oh, Roku's up on rumors that Netflix might be acquiring it. Up 9%. So, for our newer folks or anyone new to trading, just stay away from this for now. It's a rumor for now. They love to buy the rumor and then sell the news. We don't even know if this is really happening. It's just some internal employees at Roku talking that it might be happening. We know how this goes. Basically, for the new folks, just stay away from it. This is a trap for retail. Shop had a very nice day off of the squeeze bottom. That 350 low that we got through turned into support and already bounced once this week. We opened right near it, and it took right off back to the daily 21. On Shop today, with most things gapping down, Shop's actually looking like a gap up. So there's some relative strength going on over here that we should take note of. If it does reject this daily 21 during the cash session and rolls back a little bit to this last low, or the daily 8, which should be stepping up near it, could be a nice little dip buy to get back through the highs of yesterday in pre-market and keep a trucking up to this daily squeeze top, right back near recent highs and psychological 400. Should Roku give out this low and where the daily 8 is going to step up to, can revisit that 350. So so basically on something like Shop, you want to be watching those 400s, you want to be watching those 350s, as we are going to be opening right in between. Not interested in SPX. So we have made it through and filled this gap. Ooh, there we go. Made it through and filled this gap so it can be removed. And yes, we did fill it yesterday, but I left it up just because as we got to it, we filled it on Monday. I left it up because as we got to it Tuesday, there was some pulling back before we filled it. So it was helpful at least, but it has been filled. In fact, most gaps have been filled this week. Except for this gap below. So, with SPX, if everything rolls over and can't hold if this little gap down that we're dealing with continues to the downside for the market, SPX will likely roll right back over to these daily moving averages that it used for support yesterday and this gap level where all the squeeze bottoms are now getting together and partying. So on SPX, very range bound. Let's see what we get today. I'm kind of expecting some further sideways action into Friday's CPI. SPY 414, very key. Already starting to slip it pre-market. Catching some bounces at those squeeze bottoms. We'll see if we open above 414. And if it can hold us up. I love that these squeeze bottoms are now here so that we can slip 414 ever so slightly. Basically, as long as we stay above, call it 412.5. We are good for more upside. Should that give out, we are likely going back to test these moving averages, and it looks like the 21 will probably be stepping up to our little zone here at 410. So if we can't hold that 412.5, these squeeze bottoms stay above 414, likely going back to test 410. If we can stay above 414 and get through yesterday's high, we need to test this 417.32. Which we have not tested since last week. So, that's your upside and downside targets on SPY today. Square had a decent day yesterday, but still getting held up at this 85. If it can get through the 85 back to the 21 at these squeeze tops, can keep trucking, but draw your trend line from the highs because it is still resistance. Not a huge interest over here. Tesla. Tesla yesterday had that a little dip down to my zone and squeeze bottoms, but then took right off back to 718 key level. Yesterday was very clean on Tesla off of our levels. Let's see, is it this one? Is it? No, it's the clear one. Yep, there we go. Here's just a few more of our levels. And down and tap this 691. Got above that 702. 712 was resistance, but then it turned it into support. All in a bid to get to that 718. So now Tesla's having a little gap up. Well, market and if things are having a little gap down again, like what was it? Shop, right? Relative strength. We got to recognize it. So Tesla showing some relative strength, little gap up and above that 718. So let's see if 718 can support us and send us back through 725, 740. If 718 gives out, it will go quickly down to 712.5. Should that not hold and give out, right back to 700. So pretty easy on Tesla today. And VIX. Finally got VIX below 24.5 in a mission to get back to this 23.33. A little gap down gives us a little gap up on VIX. Basically looking for it to stay below 25, which will be a big key sign that we can continue upside on market, and VIX will reject 25 and hopefully roll down to this 23.33 and this daily 200, which has pretty much caught up to 23. So big key zone right here on VIX, looking for it to stay below 25 and roll down to test this. If we start breaking over 25, the market is likely rolling over and giving up its daily 8. So it's kind of nice on VIX as we are, if we do pop up, as VIX will be testing its daily 8, the market would be pulling back down and testing its daily 8. So we have a nice little dance there. But watch these key levels, 25, 24.5. Hopefully we can get down to these squeeze bottoms and test this zone on VIX. Would give us a nice up day on the market today. So, hope this was helpful for everybody. We'll see you in chat. Good luck today. And remember, no beast, no feast.